Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Of course, Cattle Call being this week brought to you by FNBO, the great big small bank. Well, can it be another week? Probably not what we've seen the last 3 weeks, but at least holding steady is what the thought is on this cash market. We're going to look at that. We know Monday was a big reversal day. We're into the doldrums of the holiday trade. Lots of things that are going to be weighing in on that as well this week. But we'll also talk about where we're at. February's discount to the cash, for example. Bringing all the conversation in is, of course, going to be Brad Kooima. Brad is with KKV Trading. And we'll start looking at this strong cash. I mean, 3 weeks of amazing trade action, Brad, and got to have a little bit of a down day a week, maybe. Steady money is nothing though to complain at.
No, certainly. Well, not from these levels. That's for sure, Susan. Thanks for having me on, of course. And I think too, I think you did a nice job of kind of highlighting or prefacing what's been really the key to the market here lately. And that has been an incredibly good, solid cash market led by the North, where the negotiation gets done. And encouraging, in a way to me that, once in a while you feel a little vindicated that, trying to work this hard at understanding the fundamentals or researching the fundamentals, maybe better said, seems to be at least paying off to a degree. Now, I continue to be somewhat frustrated with the disconnect between futures and cash. I'm trying to maintain perspective, saying that, well, it's okay, we'll stay at a discount. This will help us stay more current. The market's telling you better sell cattle. I was worried about some of these high break evens that these yearling cattle have now. We're not into that big yearling run yet, but it won't be too long after New Year and you'll start to see them. And if we can hold these levels in this mid 190 area, I think people will be happy to sell them, and I think we'll fly right through them. So I am the old days, Fed cattle would be at or a premium to the cash market because we build in some weather premium. Right now, we are a steep discount, as you mentioned. Kind of unusually so, in my opinion, even though there does not appear to be anything really weather-wise on the horizon. But, winter's just starting. There'll be some time for that yet, I suppose, still to come.
Yeah, ready or not, eventually we'll probably get that snow and ice and everything that goes with it. But looking at the reversal that we saw on Monday, I mean, even today, as you and I are talking midday on a Wednesday, there's a negative feel within this market. Is it going to continue through the end of the week?
Well, we've had a lousy 3 days actually this week. There's no other way to put it. Monday, you come in off the euphoria of the big up on the Friday, and the forward spread's working really good. And then we just died on the vine and on Monday. And sometimes the market is that way. Particularly cattle seem to have that. I don't know, these V tops and V bottoms. And I guess I'm sitting here. We are off our lows a ways. The lows today on the fib cattle are right against a couple of moving averages. That'd be a nice spot to catch here. And when you're this steeply discounted to cash, I guess I still think, like I mentioned earlier, that the February cattle looks to me a little bit undervalued. I should follow up a little bit on your cash question because I do feed cattle, so I am in the market. I think I can get steady money right now, which is 196, which is the same thing we got last week, right? I'm bid 195. And by the way, the cattle that we sold last week will all be gone and dead by the end of this week, and they all are going to a very far away address from Iowa. I'll tell you what. Long haul, which is that to me, that's not negative either. That tells you that, some of these areas are continuing to chase both supply and maybe more importantly, grade. So you did ask me, will it continue? I think you got a couple of short kill weeks. Holiday on a Wednesday is a little bit wonky too. There might be an extra, half a day or a day, something like that some of these places are going to take off. Packers are griping about margin or lack thereof. So maybe we have steady, maybe we limp into the end of the year, if you can call 196 or 5 limping. I guess I don't think you should, but maybe we'll be steady-ish as we finish out the year. I did think that maybe the South would be a little more emboldened, if I should say that. Last week they got 191, we got 196. I got to think they feel like, we might have screwed up by selling them that easy. I guess I would still be in the camp thinking that maybe the South could be a little bit better than that 191.
So the WASDE numbers, we saw a decrease in the corn ending stocks. How much of an increase are we going to see then maybe in the cost of gain?
There you go. Well, let's go back to that question on the yearlings, and I got some of them. These high priced yearlings going to break even at what, 192 or 3. Cost of gain is going to be $1.10. Okay, all of a sudden we're looking at a different value here for corn than what we had at that time. Where cost of gains, I think, you're going to have a little better break even because the corn's a little cheaper than when you bought the feeder cattle in August and September. Also, you also have a deal where we haven't had, I mentioned weather, but we haven't had any. These cattle have really, really performed. At least ours have up here in this neck of the woods. So that probably helps it too. You mentioned that supply demand report. They actually have supply demand reports for beef too, although most of us never look at it. The USDA actually, does a report. They actually decrease the amount of beef production we're going to have in the second and third quarters by 1.5%. How about that? While I didn't really put a lot of credibility into it, their reasoning is because the border closed. Okay, the border's not going to stay closed. In fact, it's going to open shortly after New Year. It'd be slow at first, but there's protocol. Ivermectin works. Imagine that. This isn't, I don't think this is a game-changing type of deal. We're going to start to see some of those Texas cattle or those Mexican cattle trickle back into Texas. I just don't see that it's a big market factor myself.
So you're talking of cash, and you talk about these cattle that are going to have to travel all the way to Texas. I do have a message. Last week, Nebraska cattlemen met, and thank you to all our Nebraska cattlemen that check out this program because they do faithfully watch it, and we do appreciate it. But a comment was sent to me in a text message today that says, my hat's off to the Iowa cattle feeders negotiating the cash trade that they did.
That's very kind. I have some great friends in Nebraska and with Nebraska cattlemen. They work very hard. Many of them are very like-minded, like I am, like we are here in Iowa. But it's nice to hear. Yeah, we and a lot of people in Nebraska do the hard work of negotiation, right? And all the formulas are driven off of a base price, which is arrived by negotiation. Our price gets put into LMR. Everybody knows what I get for cash cattle because it gets priced, yet they think it's some top secret deal that we don't get to know what their little secret LMR deal is. So thanks for the opening. And, I'm never ashamed to step right in front of them. Yeah. So nice words. Thank you. Tell them thanks.
I will definitely pass that along. Well, they're just going to see it when they watch this episode. You talk of this holiday trade, and that gets me thinking consumers. You and I were just talking the cost of purchasing that beef to get ready for the Christmas season. Do we have a fear that there's going to be a pushback coming from consumers?
Well, Susan's going to hear a little selfless plug here. If you're a customer or a friend of ours, we send you Christmas gifts, and she's going to try out my recipe, right? For a whole ribeye. Yeah, it's good. If you could tell me what demand is going to be on the 10th of January, you are a genius. You are hired. Okay. I can only go by what I can see here. I know that there's that fear of recession. I mean, my goodness, it feels like I've been talking about the same thing for 2 years, maybe longer. It's just, okay, let's stay concerned about it. Right. But I can only go by what I see in the here and now. And in the here and now, how was Thanksgiving? Record travel. Black Friday, they say record sales. Christmas, they expect record travel again. They tell me that the retail sales for this Christmas season is outstanding. Stock market's just a stone's throw from its all-time highs. I don't know. Maybe they'll flip a switch and this demand will slow way down. I don't see it. I look at the weekly reports every week of what the average wholesale price of this beef is in the 13 major cities, and it's a huge report. All these different cuts. Most of us don't even know what they all are. But you know what? Hamburger's a little higher than last year. That's because I think there's increased demand for that because I think there's an element that's on budget that's what they're doing instead of pork and chicken. I'm sorry. You can only eat that so often. The steak cuts are either at or below a year ago's prices on a wholesale level, and thanks to COVID, these people figured out that they can cook a steak at home, do it 2 times a week, 3 times a week, maybe for what it costs them. So I'm sorry, I'm not in that camp. I know the Packers gripe and he's losing money. You know what? It's their turn. That's what happens when the numbers get tight. So keep an eye on, whether everybody's going to keep killing and whether we're going to lose a plant closure. That's what we're all worried about. Me too. But ironically, new plants are coming online. like the one in your fine state's going to start killing in April, right? So the irony of, worrying about that at this time seems to be, I don't know, ill-timed, I guess I'll put it that way.
All right, Brad, what's the best way for folks to get a hold of you?
712-722-0023, or look us up on kkvtrading.com. Thanks again, Susan.
Thank you. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been another edition of the Cattle Call of this week, brought to you by FNBO, the Great Big Small Bank, right here on the Rural Radio Network.